Welcome back to REI Accounting Talk. I am your host, Sarah Bratcher. I am a CPA and I own REI Accounting Solutions, where we offer bookkeeping and consulting for real estate investors. This is episode 2 and our very first episode that will have a YouTube option. I'm going to be completely honest. This is a huge learning curve. And I'm doing what I can to get this information out there without delaying, because I don't know what I'm doing. Please leave me any feedback for improvement, and I will accommodate as I gain more experience. Today, we are going to talk about 5 things every real estate investor needs to know about accounting. There's much more than 5 things out there you need to know, but I thought this would be a good starting point, and we can discuss the others over the course of this podcast. The first thing I want to talk about today is what software to use. You are going to need to find an accounting software that fits your needs and your goals. You can gather information from your peers and all that, but at the end of the day, we need to look at what you have going on and where you're going. And there's so many options in real estate that can vary greatly. So I have some questions prepared for you to be able to ask yourself. And the first one is, am I satisfied with my current system? Will my current system work in 1 year? And does my current system have all of the functions I need to run my business? Do all of the reports that it produces satisfy my lenders and the tax preparer? Does it track the metric that you are most concerned with? Some people are concerned with profit margins, and some just want to know how much cash flow at the end of the day you have. So just whatever's most important for you, make sure it tracks that. If it doesn't, then we'll talk about that in a minute. If you answered yes, then congrats, your system is working and you should continue using what you have. Don't be discouraged by all the bells and whistles that are out there, all the options that are out there, so much noise. Using what you have and what's working is always a great answer. If you answered no, then it might be time for a new software. There's 3 main factors I like to research when helping real estate investors choose which software is best for them. And the first thing is, how many properties do you currently have and do you plan on having in the future, at least within the next 5 years? And this is kind of just a basis. If you and your spouse are on different pages, you want 100 and they only want 20, then, find kind of a common ground for that. But there's some software out there for accounting that doesn't accommodate that many. There's some free options for accounting out there that may only accommodate, 5 units. And that just may not be, if you're looking to have 10 units in the next year, you don't want to get frustrated within that year that you can't track each individual one. And then the next thing I want to talk about is, does your tax preparer have a preference? This is a huge thing. I have seen somebody spend a lot of money on getting their books done, and their tax preparer is like, no, I can't use this. I need this report to get this done. And they have to take your bank statements and ask you a bajillion questions and basically recreate your bookkeeping, because the software you're using isn't in line with what they need to get you your accurate taxes done. So make sure you ask your tax preparer and make sure what you're using is in line with that, so you don't have to end up paying twice for something like that. And the third thing we need to look at is what property management software you use. Most property management software has an accounting piece to it, but I want you to be aware that this software was made specifically for property management and not for accounting. And that being said, there's often a larger learning curve because the accounting functions are not a priority for these property management softwares, and they're often out of date and clunky. If you're just starting out, it might get you by for a year or two until you need something more robust and more efficient for you. And so the next big item I want to discuss is we need to always separate business and personal transactions. Do not commingle your checking or credit card transactions. Let's stop doing that. Please, please, let's stop doing that. I know it's enticing to fund that flip with your personal cards and get those reward points so you can go on that big vacation, but it may cost you way more than that later on down the line for several reasons. I think the biggest thing is separating your transactions can protect you from legal liability. It also keeps your bookkeeping clean for tax purposes, and you can more efficiently take advantage of the tax strategies your tax preparer has for you, and it helps them quickly see what tax strategies you can use at the end of the year. Separating transactions saves a ton of time when entering your bank statement and categorizing everything. You don't have to sort through all those personal transactions to remember, hey, where does this go? Was this really business or was this really personal? Separating your transactions can accurately track projections and help you make better business decisions when your personal transactions are not intertwined with those. I know there are a lot of influencers and coaches out there teaching you to just get started without forming a business entity, and that is great. I want to encourage you to do that as well. All you have to do is just open up a separate personal checking account, because you can't open that separate business account until you have the LLC docs. So just open a separate checking account that you don't have your personal transactions in until you get that entity formed. Talk to your lawyer about what's best for your need. Business credit cards does help you establish your business credit faster. So I would also advise, as soon as you get that LLC formed, apply for that credit card as well. And the third thing I want to discuss about what you should know about accounting in your real estate business is you need to create a system for organizing your documents. You should digitize all of your receipts, invoices, closing statements, contracts with your contractors, and you need to store them in a cloud-based system for at least 3 to 6 years. There's varying degree on how big your risk is for that. There are some free options out there that I would recommend using over storing them in your accounting software. There's always the option to attach the invoice or the receipt to the expense, and that's great for reference and everything. But when you need those, you need all of them for a whole year or something, it's so time consuming to extract all of those transactions that are attached there. So if you get, a big file and keep everything in there, it will save you a lot of time if you ever need them. And my hope is that you don't ever need them, but when you do, you'll be grateful you did it. And within that drive, I would recommend to create a standardized naming convention and folder structure for easy retrieval. You can do your folder structure by date or by project, whatever's most convenient for you. And this is also a good thing for maybe a VA to do. A lot of people are hiring VAs right now, and you just have that app on your phone and you quickly take a picture and throw it in the folder, and they can do all that stuff. But they will need information also, so when you save that picture, make sure you have the naming convention, the date, the project, and whether it's plumbing or whatever you need to specify on there. And the last thing I want to talk about on this subject of the documentation is to regularly back up your documents and make sure they're there to prevent data loss. Don't ask me how I know why this is so important, but I know it's so important. And the fourth big item that real estate investors need to know about accounting is using a chart of accounts that works best for you and your business. I talk to people all the time wanting to do it yourself and trying to do it yourself. And their main hiccup is figuring out where each transaction goes. And that can be such a hindrance in getting everything done because they don't want to sit down because they're like, oh, I don't remember how to do this. Is it a repair or is it a maintenance? What's the difference between a repair or a maintenance? And my suggestion is group repairs and maintenance. That's one thing the IRS doesn't really need to know if it's maintenance or repair. You can just put them all together. And later on down the line, as you start getting more familiar with your financial statements, you can be like, oh, okay, I think I want to do it this way. And here's my hard and fast rule of what is maintenance. And here's my hard and fast rule of what is repair. And I want to start tracking it like this moving forward. And you can do that at any time. But getting started, don't let that keep you from quickly getting everything categorized. And a big thing I recommend is having a research later category, or it may be an ask client or ask accountant, just some kind of place to dump everything so you can just get all of those transactions done and don't let it hold you up for too long. But yeah, so, and less is more. Like I said, combine as many of those accounts as you need in the beginning, especially just to get everything done. Decision making is so much easier when you sit down and you don't have all those options. You have a shorter list of options and you can just get it done. Send me an email if you want a free copy of my chart of accounts to get started with. It's very short and sweet, and I'll give it to you if you want to look at it and redo your chart of accounts. And the fifth thing I want to talk today about real estate investing accounting is not all CPAs are created equal. CPA does not instantly mean that they're a tax preparer, and a tax preparer does not mean it has to be a CPA. Some CPAs specialize in bookkeeping, like myself. Love it. Financial accounting, I've been in it for 11 years now. I love it. Some specialize in governmental accounting. Not me. Don't ever want to talk about governmental accounting. It's way too confusing. But those governmental accountants know it like the back of their hand because they're familiar with it and they do it every day. And then some CPAs are in tax prep, and there are so many other options out there. Too many for me to sit here and name. But it's kind of like doctors, you wouldn't go to a podiatrist for a headache, you've got to find, your CPA that specializes in what you exactly need. And then down to real estate investing, you would want them to niche in that, unless you are a big oil and gas guy. If you're an oil and gas guy and you have this real estate stuff on the side and most of your stuff is in oil and gas, you need to find an oil and gas CPA. So just think of those things when you're looking for a CPA. You have to interview your CPA to make sure they will meet your needs. It's expensive to outsource tax preparation and bookkeeping. Interview them, make sure they're a good fit. We don't all have to be a good fit for each other, and that's okay. That's okay. If you ever have a consultation with me and I'm not a good fit, I'm not offended. I know if everyone was only meant for me, then everybody else would be out of business, and I don't want that to happen either. I think there's a place for everybody. So don't ever feel bad if we chat and we're not a good fit and you find somebody else that's better. That is completely fine. It's what's great about capitalism and being in this field is I feel like we're all winners. We don't have to compete that much. The good people will stick through it. But I would, back to how to choose a good CPA. I personally would prefer a CPA that is very helpful and suggests actions instead of always telling you can't do that. No, I'm not going to do that. But you've heard other people do it and they don't tell you why they won't do it. And so just my personal opinion, and I think most real estate investors want a proactive bookkeeper and tax preparer because most people get into real estate for the tax advantages, and they're very proactive in that. So don't assume just because they specialize in real estate means they will be the best fit for you. You got to ask those questions, make sure they fit your needs all the way around, and will fit your needs for a while, because that it's huge. You don't want to onboard with somebody and realize, hey, this isn't working. So take the time, do it. But I also want to mention, you don't have to hire a CPA at all. You don't have to hire those credentials for either side. There are some amazing bookkeepers out there, and there are some amazing tax preparers out there. Just make sure the tax preparer is at least an enrolled agent. They call them EAs. They are just as knowledgeable in the tax field as a lot of CPAs as well. They just specialize in taxes. So that pretty much sums up the main points I wanted to chat about today. So if you have any questions, you can email me at Sarah, SARAH, at reiaccountingsolutions.com. You can find me on Instagram at rei.accounting.solutions.with.sarah as well. And please make sure to follow, like, subscribe, rate me 5 stars, leave a review, do all the things on whichever platform you're watching this on that makes this possible to continue to bring you information in this space. And this should be on YouTube also. So leave a comment. Let's chat in the comments. So thanks for listening, and we'll chat later. Bye.